Hello and welcome to Buddha IAS. Dear students, let us continue our discussion with respect to Economic Survey 22-23. This is a brief about me. Let's get started. As I told, chapter number 1 and 2 are very important. There's a flow in this chapter. You have to catch that flow. Here, having discussed the first two, the global economic challenges and how these have posed challenge on India's macroeconomic and also growth indicators. Now, in this session, we'll discuss as to how India is resilient to these challenges and what are the growth drivers. These are very important, and in fact, this topic, in fact, like justifies how India is resilient and how the recovery is complete, right? India's economic resilience, India's ability to bounce back. Say, for example, when you compress a spring, if it bounce back, we say that it's resilient. If we face some difficulty, if we are about to like able to bounce back, then we can say that we are resilient. Similarly, India's economic resilience, ability to bounce back because of some growth drivers. After that, we'll be discussing not only the growth what we have is above the world average, also it is a inclusive growth, right? Let's get started with today's topic, India's economic resilience and growth drivers. The growth estimate for the financial year, current year, financial year is 6.9. So India in the financial year 23 has recouped, regained what it has lost during the pandemic, renewed what had passed. It has renewed those things which were passed because of the pandemic. It got re-energized. It got re-energized what has slowed down during the pandemic and since the conflict in Europe. So India's GDP growth is expected to remain robust in the financial year 24, also supported by strong domestic demand. This is the most important thing. We are not dependent on the external world. We are dependent on the domestic stimuli itself. So pre-pandemic 3.7 was the growth. During the pandemic year, it was -6. Next year, it was 8.7. We were able to bounce back. Then it is 7. Like now, revised is 6.9 if we take, right? Next year, it will be between 6.8 and 6. This depends on the external global factors, right? Any doubt with respect to these things? Okay. Domestic stimuli is to growth replacing the external stimuli. We have sufficient the growth stimuli within our country. Let's see what are these things. They are very important. This may be asked in your prelims, and also you have to use these things for your mains answer writing. Rising domestic capacity utilization because of increase in domestic demand and also domestic consumption, enhanced capacity utilization and business sentiments, private consumption highest since 2015. This time, especially in the first half, it was the highest since 2015. Improving consumer confidence with respect to future growth and also present status, near universal coverage of vaccination, double dose, right? Release of pent-up demand. Pent-up demand is the demand which which you have suppressed. Say for example, if you have got exam, so now 10 plus 2 and degree exams are going, you have pressed many of your demands. This will be released as soon as the exam is over. Similarly, During pandemic, we suppress some demands. Those demands are released now. So, dear students, what are your pent up demands? What you have suppressed all these things? So, this is the release of this pent up demand, especially among the UPSC aspirant, is the one thing which is spoiling their preparation. Okay, especially senior aspirants. Capex growth, corporate expenditure grew at an average rate of 30%, a very, very high number during the financial year 12 to financial year 2022. 13% on a year on year basis. Capex, capital expenditure, doubled in the past 5 years. Buoyancy of tax collections, a buoyant tax collection. What is this buoyant tax collection? Generally, if there is increase in GDP or if there is growth, definitely the tax collection also should be increasing. Common sense, right? Is this clear? Say for example, now gross domestic product, think that it is 100 units. It has grown to 200 units. Then don't you feel there will be corresponding change in the tax collection? Obviously there will be. But if the tax collection grows more than the growth, more than the growth, then it is said to be buoyant tax collection. To simplify, say for example, the economy has grown at 10%. If during this time tax collection have grown more than 10%, say for example 50%, then we say that there is buoyant tax collection. Clear? Any doubt here? Very important concept. Okay. Limited growth in revenue expenditure. So expenditures of two kind. One is that which creates asset, that is known as your capital expenditure. Other one for day-to-day necessities, which doesn't create asset, that is revenue expenditure. So it's better to reduce revenue expenditure. So here there's limited growth in revenue expenditure. Double-digit growth in bank credit to MSME. This is a very important aspect. If credit growth is high, it means that people are taking more money. What will they do with the money? Here, in case, here these are industrial people, MSMEs. So they will be investing in production, right? So if production increases, then growth definitely increases. Declining scheduled commercial banks, grass, net, grass non-performing assets, grass non-performing assets ratio. So these are very, very important indicators based on which we can conclude that India's economic recovery is complete and India's economy is resilient and it is driven by the following growth factors. Right? Give due attention here. This is India's growth projection by various agencies for financial year 23. As you can see, all have given around 7.3 to 6.6. Right? All these are very, very important international organizations. So survey has taken the average and it has given 6.9. Right? Growth estimate for the financial year 23 is 6.9. This is higher than almost all the major economics and even slightly above the average growth of the Indian economy in the decade leading to the pandemic, that is pre-pandemic level. It is in fact more than the pre-pandemic level growth rate. IMF estimated India to be one of the top two fastest growing economies in 2022. Despite strong global headwinds, global turbulences, tighter monetary policy, if India is still expected to grow between 6.8 to 7%, and that too without the advantage of base effect. Without the advantage of base effect, because here you will be taking year on year growth. Here we are talking about financial year 23. If previous year growth was very very low, then if the growth increase by a marginal amount would have been given a higher figure. Let me explain this here. Say for example here, okay, see here. So here the growth is negative, right? Here, if for the next year, this will be taken as the base. So any little improvement will lead to high growth. But we are not having that base effect this year. Last year also we had better year. So base effect is not there, right? Okay. Despite strong global headwinds and tighter domestic monetary policy, if India is still expected to grow between 6.5 to 7%, and that too without advantage of base effect, it is a reflection of India's underlying economic resilience, of its ability to recoup, renew, re-energize the growth drivers of the economy. Right? Very, very important line. You can quote this word in your mains. Domestic stimulus to growth replaces the external stimulus. Here, most importantly, domestic consumption has rebound. Though it is in many countries' cases also, in many economies also, the rebound in India is impulsive of its scale, means there is high rebound in domestic consumption, right? The domestic consumption contributed to rise in the domestic capacity utilization. Domestic consumption led to increase in demand. This increase in demand has led to increase in capacity utilization. Means we are increasing our ability, our capacity to make use of the assets what we had already. Capacity utilization, right? Private consumption highest since 2015. See, you can see here, this is the highest one. Private consumption, why it is important? Consumption means it increases the demand, right? To meet this demand, it has to be supplied. So supply will also increase. When there is increase in demand and supply, growth will definitely improve. Improved consumer confidence on both parameters of current situation index. See here how current situation index is getting positive after negative during the corona year. Not only that, future expectation index is also going in a positive way after the pandemic. Near universal coverage of vaccination. What are the uses of that? It saved life, and people were out on the street to experience the bazaar. This was not there previously. Everywhere locked down. Like if just remember, if you have come out, polices were chasing you. Service providers are returning to resume the business. Please go back to 1 year. This we are discussing of last year's, exactly 1 year. What happened? It served as a health stimulant to the rising consumer sentiments and thus recovery and growth of the economy. Very simple. This we have already dealt. So I'm going little fast. What is pent up demand? Releasing those demands which you have suppressed, pent up. That is the meaning. Describes a rapid increase. Describes a rapid increase in demand for service or product, that is good, usually following a period of subdued spending. That is when the things were like lockdown, pandemic era, right? Consumers tend to hold off making purchases during the recession. Here in this case, pandemic, building up the backlog of demand, and that is unleashed when signs of recovery emerges. This is in general, and you have to apply this to the pandemic era. Pandemic demand rebound in consumption, release of pent up demand, a phenomenon not unique to India. So don't think that pent up demand is unique to India. No, it's not one of its kind to India, but the local phenomena influenced by a rise in the share of consumption is dis is in disposable income. Sorry, I repeat it. Release of pent-up demand, a phenomena not unique to India but a local phenomena influenced by a rise in share of consumption in the disposable income. This is very important not only with respect to India, with respect to many developing countries, because the share of consumption in disposable income is high. I repeat, the share of consumption, not savings, share of consumption in disposable income is high in India. A pandemic induced suppression of the consumption build up that much greater recoil force. Hence, consumption rebound may have lasting power. So it simply says that since ours is a developing nation and in the disposable income, more portion will be with respect to consumption goods. Because of pandemic, this was suppressed. When the environment is good, it will recoil. So it will recoil to a greater extent that it may be there for long time. Pent up demand may last for long time. Then you may ask me like, okay, what is the proof for that? The proof is accelerating growth in personal loans. People are taking more loans. What will they do with those loans? They will spend on what they will spend. They'll spend on those demands which they have suppressed during the pandemic. In India, accelerating growth of personal loans in India testifies to an enduring release of pent-up demand for consumption. RBI's most recent survey on consumption confidence released in December 2022 pointed to improving significant improving sentiment with respect to current and prospective employment and income conditions. Okay. Also, pent up demand is reflected in housing market also. Demand for house loans have picked up. So housing loan have picked up. So what does this mean? People are buying. So house loan inflation means they will be buying houses. So this will lead to increase in demand for construction. Construction has spillover effect. It has got backward and forward linkages, right? Demand for housing loans picked up. Consequently, housing inventories have declined. Inventories means those things which were not sold but which were kept for selling. Inventory is an accounting term that refers to goods that are in various stages of being made ready for sale, including finished goods that are available to be sold. Work in progress meaning the process of being made, raw materials to be used to produce more finished goods, right? So, housing inventories have declined, prices are farming up, and construction of new dwellings is picking up pace. This has stimulated innumerable backward and forward linkages that the construction sector is known to carry. Vaccination was one of the most important aspect in this direction. Since there was vaccination, people came out. So vaccination lifted the housing market. In its absence, the migrant workforce could not have returned to construction sites. It is twofold. Like somehow the people who employed the workers were confident because they were vaccinated, and workers themselves were somehow confident because they got vaccinated, and they are not afraid now because they are vaccinated. Okay, you can see here housing bank credit declined during the corona time, but it is picking up very fast, and inventory overhead are decreasing. Growth in bank credit to housing complementing the falling house inventories. Okay, this is one important aspect throughout the economic survey. At least I remember, like 100 times they are used. Total capital expenditure increased. In fact, is like 2.9%. Okay, like easy to remember, 2.9% in the financial year 23. It was previously the long-term average is just 1.7%. Total capital expenditure grew at an average rate of 13% during the financial year 12 and 22. The capital expenditure multiplier of the country, very important, that is 4, right? The economic output of the country is set to increase by at least 4 times the amount of capital expenditure. Capital expenditure is one expenditure which leads to creation of assets, right? So expenditure increase by 1% means economic growth will increase minimum by 4%. Very important, right? See here, total capital expenditure grew at an average rate of 13% during the financial year 12 and 22. This is the highest. It again double capital expense doubled in past 5 years. Here we have taken the absolute figures in lakh crores. See here. Now in the financial year 23, it was 4.5 lakh crores. It was just some 1.8 lakh crores some 5 years back. Private investment remains upbeat. It is increasing. This is also capital expenditure investment. Give your attention here. The capex tasked in the last 2 decades of the government of India was a part of strategic package aimed at filling the infrastructure gaps in the country. One of the reasons why Indian is infrastructure industry is not growing, or it is not having significant contribution when compared to other countries in the country's growth and also GDP is there is a infrastructure gap. By spending huge amount in the form of capital expenditure, this infrastructure gap has been filled. And also there is crowding in private investment. By increasing the capital expenditure of the government, you are encouraging the public crowding to bring in private investment into the economic landscape, broadened by the vacation of non-strategic public sector enterprises that through disinvestment and idealizing public sector assets. So there is now we are staying in a era of liberalization, privatization, and globalization. There is a huge disinvestment going on. There is a vacuum created. This vacuum has to be filled by the private. So for that, we are spending more capital, right? So here, buoyant tax collection. We can say that tax collection is buoyant when the rate of increase of tax collection is greater than the rate of growth of the economy. So here is a buoyant tax collection and limited growth in revenue expenditure. With respect to direct tax collection, there is an increase. Okay, this is one most important, like which needs to be emphasized. India paid its growth dues in the previous decades with respect to banking sector and corporate sector balance sheet cleanup. Very, very important. This is the one on which India is relying more with respect to the financial sector. As you are aware, we had like global financial crisis in 2008 and 9. After that, like there was subprime lending. This led to increase in non-performing assets. This has been decreasing now. Please give due attention here. Core debt of India's private non-financial sector. So here this was like high to the tune of 113%. So here most important thing what you have to keep in mind is India's GDP. What is GDP? Gross domestic product. What does this mean? Total value of all final goods and services produced in 1 year or specific time. So if you take the value of hypothetically value of all goods and services produced in India to be 100, means the income of the whole country is 100, the debt by private non-financial sector was 113 rupees in 2009 and 10. Is it clear to you? Now it has come down. It is just 87% of the GDP. Here also you can see gross non-performing assets as percentage of gross advances. The advances are the lending by the banks. It was very high to the tune of like 11% during 2008. So during this last decade, we have paid the dues. Now our bank sheets are cleaned up. They are ready to lend. Now gross non-performing asset is just 5%. Very, very important statistics. This is very important because you can like correlate the things. In US, many major banks have collapsed in March. It was like not small banks. Some of the biggest banks, like Silicon Valley Bank, have crashed. But our banks are strong, right? Strong balance sheet of corporate sector. In the last decade, Indian non-financial private sector has been shown in the graph. Sector debt and non-financial corporate debt as share of GDP has declined by 30%. Have shown how from 113 it has declined to 89%. This limited the increase in interest rate, which together with savings on overhead during the lockdown contributed to high profit. Banking sector in India has responded in equally measures to the demand of the credit. So there was demand for credit and banks are in a position to provide that credit. So here please give your attention with respect to MSMEs. See 2021 credit was very low, double digit growth. and also larger industries, it is steadily increasing. Non-food credit and also industry are increasing. So this is a very, very important indicator because when credit increases, production increases. When production increases, growth increases. Banking sector India, year on year growth in credit since 2000 since 2022 has moved into double digit and is rising across most sectors. The aggressive supply of credit triggered by their improved fiscal health, very, very important. If the fiscal health of the bank is not stable, they won't be able to, they won't be in a position to provide the credit. The non-performing assets being fast tracked for quicker resolution or liquidation by Insolvency and Bankruptcy Board of India, IBBI, Insolvency and Bankruptcy Code, right? Declining schedule commercial banks grasp non-performing assets. So if you can see here how they are reducing. So since the non-performing assets are decreasing, banks' ability to give loan will be higher, and provisioning coverage ratio in case of any uncertainty, the coverage is increasing. See here. Okay. Banking sector has negligible cross-border claims in times when currency risks are high. This is this has to be looked in the present stage where there is depreciation of rupee. There is no need to worry for that because we have got negligible cross-border claims. Means we have taken very less amount from other countries. So there is no need to worry with respect to currency fluctuations. Inflation, CPI inflation back with RBI's target range. So you can see here from November it has come down. But for the whole year, RBI has said that it is 6.8. And in fact, at this point of time, having 6.8 inflation rate is fair, good enough, and in fact, it is in our own good. RBI has projected the headline inflation at 6.8% for financial year 23, which is outside the target range. Target range is 2 to 6. So it is outside. At the same time, it is not high enough to deter the private consumption. If inflation is very high, consumption, private consumption decreases. Say for example, inflation with respect to onion. I remember like some 5 to 10 years when onion prices were very high, almost nobody used to use the onions, right? Also, not so low has to weaken the inducement of investment. I repeat, now we have got 6.8% of inflation. It is not high enough to deter private consumption and also not so low has to weaken the inducement of investment. That is the reason the lower range is 2. Why the lower range is kept into inflation targeting should be between 2 and 6? Because if inflation goes below this, there won't be inducement for investment, right? Like if there is inflation, prices will increase, right? So this induces investment. Are you able to link the things? Moderately high inflation has further ensured the anchoring of inflationary expectations, preventing prices from weakening demand and growth in India. So these are very important lines given by the economic survey. So you just reproduce them as it is. Why I have taken this line and reproducing in UPSC is picking questions as it is, line by line. Additionally, with inflation on the declining path, interest cost of domestic credit will likely decline, inducing a further increase in the demand for credit by corporates and retail borrowers. Right? Any doubt with respect to these things? If you have got any doubt, please let me know. Okay. Like, like some of you were saying that you want like more elaborated explanation with respect to increase in bond yield and also how it led to capital flight and decreased in like decrease depreciation in currency. I have noted all those things. I'll be addressing those things and in addition to few other questions in my next session. If you have got any doubt, please let me know. And those of you who may be watching on our YouTube channel, if you have got any doubt, please feel free to comment. I'll be carefully looking to those things and I'll be like addressing those things in my future videos, right? So we can say that India in the financial year 23 has recouped, regained what it has was lost, renewed what has passed, and re-energized what has slowed during the pandemic and since the conflict began. So economic recovery is complete, right? Dear students, thank you for watching. And for class PPTs and MPQs, please download the Buddha IS app. If you like the video, please do share and subscribe to our YouTube channel. This is for now. This is Raghu signing off for now. Until we meet again, enjoy your preparation. Have a great time. Thank you.